The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com. I wanted to talk to you today, give you a market update and recap, and wanted to follow up with a couple of the trading ideas I've put out there for you. First of all, starting out with the market's rebound, not overly surprising based off of the size of the sell-off. Coming into known support zones, we saw it slowing down here, and then giving us a good pop today on good heavy volume, decent volume. Now that doesn't mean we're definitely finding the bottom. We still could very well be in a bearish downward trend, but you can actually, one of the things I always do is keep an eye on that down on a smaller time frame. I don't go down to 5-minute charts or anything like that, but I do pop down into like 30-minute charts, hourly charts. And what I was looking for was that slowing momentum, that general slowing momentum pattern where the distance between the support zones, you can see from the breakdown, that first drop is a doozy. And then the second big heavy day down was also a doozy. In between, we had that minor recovery on that high trend day. And then we see the real nice slowdown right there yesterday. And then today's pop is not a surprise because we see it slowing down and then pop. Nice little move by the market. Definite reversal of the short-term intraday trend. But there's also a little bit of that longer-term intraday trend. In fact, I could probably even draw just a random trend line. That's a kind of a visual spot I just saw, kind of a both sides of that trend line. Want to see higher highs and higher lows, really confirming to have a real good idea of which way it's going. Let's drop that back out to the daily time frame. And with the market rallying up, let's take a quick look at some of the other major factors in the market. Let's look at the dollar index. Man, that dollar has been red hot, just ripping out. It's gone parabolic. Now, parabolic is that really steep, seemingly unsustainable trend angle where it just rips up. And, that parabolic curve, if you go Google parabolic curve, you'll see what I'm talking about. That really nice high up into over 100, hit that high over 100, bam. And then we see a bearish Harami candle inside there. I don't know how much of a sell-off we'll see. There's still a lot of pressure, a lot of things going in favor of the dollar. Now, with that being said, if you see the dollar topping and putting in a drop, then we might expect to see, like oil. Let's go ahead and take a look at what's going on with crude oil. And you see just a little bit of love there in the oil. Not much. It's still kind of trying to find that zone. Looks like it's given up that $48 line. Boom, dropped a little bit. And again, continued downward movement wouldn't be surprising. Precious metals are not doing well at all with the dollar strengthening. If you look at like yellow gold, just getting crushed, coming down into major support, but there's quite a bit of controversy going on with some of the international gold trading. There's been some definite distrust in that, if you will, with the way that they're trading that, some of the arbitrage trades around it, and some of the fixes on it. So I'll see if I can find some of those articles and post them for you. That being said, precious metals being cheap could create an opportunity to buy, but I don't think that time is yet. So that's what we're kind of looking at with the broad market. Now, I wanted to address real quick one of the trade ideas that I put out there, especially with the newsletter I put out 2 weeks ago, and talked about the energy trade that I look at every year, and that's that I put in the XLE, and was talking about maybe it finding some support in here and popping up. And of course, nope, that did not happen, didn't occur yet. If it is, we might not see that it will occur. But I want to talk to you a little bit about the actual trading strategy I put on that trade. I put on a ratio back spread. So I did a call ratio back spread. And if you look at it here, let me show you what I've got built out. Let me actually go show it to you from the little monitor page. I duplicated it here in virtual account. And here it is. We went in and I went longer term, 99 days till expiration. Those are the June 15s because I expected it to run through May. And went and sold one deep in the money call and bought as many out of the money calls as I could with the premium. Now, typically what I'll do is I'll try to sell a delta 80-ish or less if I can get it in there, and try and buy as many deltas as I can out of the money and try to, the name of the game is to overpower the delta. Now, if you actually look at the delta column here, and you come down and look at it, we have sold a negative 59 and then bought as many of those options, which led us to a positive 71. So it's giving us a little bit of a positive delta. You'll notice it's not very positive right now, but that's also because it has dropped instead of rallied. Now, these options are good through June, and this back ratio is designed so that it just doesn't hurt that bad. Been dead wrong, absolutely dead wrong on the direction, and it's that $108 drawdown. Now, I've got another position up above that. That one looks a little uglier. That's actually a USO position that's got a whole bunch of premiums not showing. It's certainly not that bad. But that negative 108.50, after the price of the ETF dropped from 78 to 74, 4 points. That would have wiped out a long call. That would have wiped out it would have taken a $400 loss on a 100-share stock position. And this trade is actually one that if it continues to drop, I walk away from this thing with no harm. The trade was structured, and the strike prices I used were 73 in the money and 83 out of the money. If you go watch the video from when I placed the trade, let me actually set the price slices here where it was trading at the time. So at the time it was trading at about, let's look at the chart real quick here. When I was talking about the trade, it was trading here near 78. So at the time I was looking to put the trade on, it was trading at 78. And I went down in the money to 73, strike price. And I'm putting these price slices out there, and out of the money to 83. And essentially went, if you look at that, we went, bam, 5 points up and 5 points down, which was approximately one potential average yield swing for that stock. It was just a typical standard deviation in price. So I'm going to go look at that on the price chart. And as you look at that, you can see at the time I was putting the trade on, where it was trading in here down at that support resistance zone. We are shooting for out of the money, out near resistance, and looking for above the average target there. And then, down to that support and looking at about one standard deviation in price. And when I talk about that standard deviation in price, let me go grab a little drawing tool here and use the rectangle and look at that little swing range, kind of that ballpark. Now, if you look at that ballpark swing range, this is a range you've seen many times in the past. We're not talking about a miracle here. We're talking about a relatively typical swing for this stock. So was looking for one swing up or one swing down. And if it ran up and did better than expected, and we actually got a full trend through through May as expected, would have made out like bandits. But even being dead wrong, this position is run down. You'll notice the graph is really skewed favorable to the bullish side and just not hurting that bad. It's dropped 4 points and it's only costing $108 of pain. Now, what I would probably expect to happen now that it's broken down is at some point in time, it'll rally back up. And as it rallies back up, I'd expect it to kind of rally back up and old resistance become new support, at which point in time is when I'll probably take an adjustment on the trade. But the adjustment is pretty simple. I've got the ratio, and if I want to, I can start balancing out the ratio. So I can start out by selling one more 73 in the money call, and I use the same month. And as I put that on, you'll see it kind of turns the trade, and it raises the break-even point to a higher price. So I just raise the break-even point by expiration to now it would only have to be below 75.50 in order to break even. So you can see that, let me move that bad boy right there. That we brought that break-even point down to where it's trading right now. Before I had to get down to 73 or better. Now that increases, it doubles up the margin. So it was a 10 points in margin, so the trade was holding up $1,000. Adding that one on would take now $2,000. If I sell a third, it will take $3,000, but I raise the break-even point even higher. And you'll notice it's starting to look like a bear ratio, a bear call ratio. And if I balance that out, sell 3, I now have a 4x4 bear call spread. And that raised the break-even point higher still. And that's one of the reasons I want to wait for it to rally back up. Because if it rallies back up and I pull out, instead of, say 430 on those premiums, say I get 530 on those premiums because it runs up, that break-even point's even higher still. So now, in order for the trade to not only not lose, but to turn out profitable and win, it just needs to be down there below that 77 price point. So the back ratio adjustment, anywhere below that old support resistance zone ballpark, would become a profit. And so if the bearish forecast ended up being right, then I can take the adjustment, no harm, no foul. If I had been right on my original bullish forecast, we would have been making out like bandits to the upside. The trick is having the margin free in order to be able to take that adjustment, and you can leg into the adjustment as needed. I hope you found this interesting. Again, this is Coach D with TackleTrading.com, and I will look to post more information on call ratio back spreads for you and put ratio back spreads for you here in the near future. See you guys in the clubhouse.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.